However, the euro dollar on the 15-minute chart is a different story. It is almost ready to go. And if we draw a trend line across the tops of the candles, you get a view that the currency pair, if it breaks and closes above that trend line, is going to get close to breaking and closing above the 200 simple moving average. And that would be a reasonable entry on a buy trade on the euro dollar up to the 800 simple moving average. On my charts anyway, we've been away from the 800 simple moving average for 784 bars. That's 8 days. Anything over 500 is above average. If we get to 1,000, that's when we really want to stand up and take notice, because the currency pair is really then at that point definitely overdue for a correction back up the other way. Mystic Chris is asking us to take a look at the hour chart, and the hour chart is also overextended. So we've got overextension almost on the 5-minute, definitely on the 15-minute, and also on the 1 hour, all pointing to move possibly upward on this currency pair within a reasonably short period of time. This move should probably start to happen within the next 3 to 5 days at the most. And it's purely technical. It's purely based on statistics and technical analysis. And I'm definitely interested in this setup. Not only do we have this sort of combination of time frames that are overextended, we also have the currency pair that made a double bottom down close to the 4,000 round number. So we could see it dip down below there and actually hit the 4,000 number before it does any of this. Boyke says red moving average, and that's the 62 exponential moving average, the same as it is every week. And it gives me the idea that, just along the lines of what Mystic FX and Chris has said, that the non-farm payroll report, once it comes out, could be pointing to a non-farm payroll report that causes the euro dollar to go upwards. And who knows, we could see a significant move based on the FOMC minutes that come out this afternoon. My view about the FOMC minutes are that we may see an exhaustion move lower on this currency pair at the time that release comes out. And we could see this currency pair move downwards and a spike really quickly. And that could complete the move downwards that we have seen so far. Money Machine says, I'm new and don't understand the entry setup are you talking about. Can you quickly talk me through the setup for the one for a minute, please? Money Machine, happy to have you here. Welcome. What we're looking at is, in this instance, a 15-minute chart of the euro dollar. And this currency pair chart has the 15-minute 800 simple moving average in black, the 200 simple moving average in blue, and the 62 exponential moving average in red. The currency pair has been away from the 800 simple moving average for 784 bars. Anything over 500 is atypical, abnormal, and is a statistical anomaly. And it makes us start to think about trading the currency pair back up to the 800. Anything over 1,000 candles is excessively overextended and definitely makes us think about trading back to the 800. What we want to do at that point, Mr. or Ms. Money Machine, is wait for the currency pair to break and close above the 200 simple moving average in blue, or break and close above a short-term trend line like we have drawn on the chart right here. And at that point, maybe enter a trade with a buy trade up to the 800 simple moving average and a stop loss down below the lowest lows that the currency pair has made.